What is up, guys? This is KOJOFOREX, aka GBP Emperor, aka Emperor of Blues. In today's video, I'm going to show you my entry criteria and certain pitfalls that I avoid so that I don't get wicked out on the market. So if you know me, then you know that I have a very simple criteria in entering the market. I don't really complicate things out at all, and that's how come I can boldly say that has been one of the pinnacle point in my consistency on the market, because I don't really like to complicate things on the market. I have a certain strict entry criteria that I always follow that are very simple, aligned, so that anytime I sit by the chart, I'm waiting to see these specific things before I take any trade decisions. Now, as a trader, I really believe that one of the easiest way to get your trading strategies sampled in a very seamless way is that you do not complicate it and then have to look out for so many criteria before you make a trade decision, right? So certain traders, they have to look out for higher time frame, they lower down to lower time frame, they check a moving average, they check this, they check that, they add so many stuff. This indicator aligning over this candlestick hitting this moving average crossing here, you know, literally watching out for so many stars before they make a single trade decision. So it literally complicates everything and it makes trading really difficult and boring. So with me and then the stuff that I teach my mentees, they are really simple. So we know what we're looking for anytime we sit by the chart. It's pretty simple, about less than 3 or 4 things that we're always looking out for, and then we can do that on the higher time frame or even on the lower time frame. As far as the market aligns with those criteria or coming to those zone of interest, then that's where we begin to make trade decisions. Yeah, so without wasting my time, I'm going to go right into the chart and break down these trading criteria and also point out certain key price action pitfalls that we try to avoid anytime, even when the market comes to this direction, in order not to take a loss on the market. Yeah, guys, so I told you that we're going to be doing something on the chart, looking at my entry criteria or certain things or key things that I look out for in the market before I take a trade decision, right? So we're going to use certain examples to do that. First thing I'm going to start with is Bitcoin, right? Now, Bitcoin kind of aligns with one of my key entry criteria, which is usually the third touch of a trend line that I taught you guys. So it's one of my primary entry criteria. I love that third touch criteria, right? And then I tell you guys that I do it or follow it in a very seamless way that is very different from anything that you've discovered on YouTube. So if this is the first time you're following me, then this may be a new knowledge to you, right? So you guys know that with me, my third touch rule always says that what first point, second point, and third touch. Then the third point is the main zone of interest or the make or break area in the market. So that's where it's going to confirm if we have indeed a trend line in the market or nothing at all, right? And then for the most part, most people would have certain Forex educators teaching them that trend line, as far as you can see some points hitting out in the market and you can draw it through the body, and then you know you'd have them have certain trend line being displayed like this, literally cutting through the body. As far as it just cuts through the 1, 2, 3, they just tell you that this market is respecting the trend line. That's not how we do it here. We deal with precision, and precision means that we are very refined to the finest details. So which also means that with us, in terms of trend line, we only focus on the wicks, right? Because at the end of the day, we're saying what 2 points make a line, and in the market, one of the easiest way to denote a point is using the wicks in the market. So that's how come we like to use the wicks as to the body, right? So here I'd see like 0.1 here, and then see how beautifully it runs through the 0.2 and then extends straight into the 0.3, and then the 0.3 becomes that area of interest. As you can clearly see, we had Bitcoin hitting here, so let me just display that quickly here as the 0.1. Then we have 0.2 here, and again we have 0.3 here. So with this, you can see that let me just use a replay tool and then walk you through the price action. You can clearly see that this is the perfect tap on that 0.3 area, and this is where we begin to excite our interest in looking out for trade setups on BTC USD, right? So what I teach my mentees for the most part is that you cannot really trust that first candle, right? In the sense that the market has been running all the way down, and then this is primarily the very only candle that has showed sign of a slowdown in that bearish momentum. So you really want to be careful and watch out for several other indications, right? So there's something that we call candlestick confluence, right? So it's a topic that I'm going to really take time to teach on YouTube as well. So candlestick confluence also tells you that even though the market is in your zone of interest, there are certain reactions that are likely to take place in those zones, and then that means that the way if a trader is trading or taking a trade on the market, they're going to wait for like 3 or 4 confluences. They're going to say, okay, it's in my key zone, it's in a support level, it's in psychological level, it's touching this moving average. It's the same thing that kind of has the same sense of interpretation on the market when it comes to candlestick as well. So with candlesticks too, you really want to look out for about 3, minimum 2 indications indications of a reversal pattern in the key zone of interest, and then that would be like that trigger point to push you. So this is not something that we would likely follow. And then subsequently, I'm going to use another example to tell you that even though we may sometimes have candlestick confluences, there are certain indications in those confluences that are going to hold us back in taking a trade decision, especially when it comes to the interpretation. Number one thing that we really do interpret is the wicks on the market. So I'll explain that in another setup for you. But just following this through, we clearly see how beautiful this one played out in the end. So this is one of my key examples, which is like the trend line setup. So you really want to learn it, and I have a video down there talking solely about trend line. So go there if you've never really, or this is the first time you're seeing my trend line video, go there and then learn it properly, right? Second one, let's use another example from USD JPY, right? So with USD JPY, that's an example that I'm going to use to break down exactly the pitfalls that we try to avoid, right? So you guys also know that I'm a key propounder of the Fibonacci principle. Yeah, so like I said, you guys already know that I'm a key propounder of the Fibonacci principle, right? So as far as you almost always see me on YouTube, you're going to know that one way or the other, there's going to be an instance where I talk about Fibonacci, right? So in this particular setup, which is USD JPY, this actually happened this week. It's actually happening now, right? This market actually traded into the key Fibonacci areas. You guys know my Fibonacci levels already, 50, 61.8, 78.6. And then in this instance, it was clearly playing around the 61.8 region, in between the 50 and 61.8 region, right? Now, this is how the setup indeed looked like. And this is where most people fall prey to certain concepts in the market and then tend to blame that, oh, those concepts don't work, these are basic and stuff, because they don't really understand the whole scope of it, right? So even though you're using candlestick, you're using Fibonacci, just maybe you may have learned it from KOJO or something, you need to pay key detailed attention to this type of concept, right? So looking at here, we may see that we had a very beautiful candlestick confirmation, which in our books we call the evening star confirmation. But the only thing here is that when you look at these confirmations, right, the last confluence or the last convincing candle had displayed certain off characteristics, right? And then what are the off characteristics here? The off characteristics, or the final bit of doubt in the market, was that, look at this wick print here, right? So wicks basically tells us which people participating in the market last before a closure, right? So if you have a wick running from the top to the bottom, it tells you that the bears were in the market before the market closed. And if you have a wick running from the bottom to the top, it tells you that the bulls were in the market before the candle actually closed, right? So looking at specifically this candle running from the bottom to the top, it tells us the bulls were in the market before this candle actually closed. And what does it tell us? Even though we are looking at this market in a scenario to find a sell trade setup, looking at the fact that we had this wick here, it kind of tells us that, look guys, you may want to wait and then see extra confirmations. Indeed, if the market is going to push down, then you are convinced to sell. Other than that, then you want to stay out, right? If you do not follow this, and let's say you are led on to still want to trade this market, then you are likely to, let's say, take this setup here, put your stop loss here, and I bet you would be at the mercy of the market, because the market will definitely reach out for your stops before it even comes in your favor or anything, right? So we play in this scenario. Let's see indeed what happened with this. Clearly you can see that what the market pushes in the opposite direction, picks our stop loss, and then comes back. And this is what majority of people face, because they are not able to interpret what is likely happening here critically, right? Now this is a particular setup that I was really monitoring with one of my mentees, the one who traveled all the way from the UK and joined us in our session. And then he was particularly waiting that we're going to take this trade. And after a while, I was not interested in taking the setup again. But I'm sure that as far as I showed interest in not taking the setup again, it's going to replay so many memories and then revise his mind about the fact that when I see certain things like this, I don't really want to take entry on the market again, right? So yeah, this is exactly how it ended up playing out. So the whole thing that I'm trying to share with you is that even though we take particular precautions in entry with respect to Fibonacci, we take key details in candlestick confirmations like this. And these are some of the pitfalls that I said I was going to draw your attention to. Let's see if we can go to the last scenario, then we take this to an end. So the last scenario, I'll probably take it in Euro USD, right? So in Euro USD, you kind of know that what it also plays around with that double top, double bottom scenario, but particularly let's focus on the double bottom one. So you can see that with Euro USD, we clearly had this market trade into this zone initially, pulled back up and started crawling in the opposite direction. And upon crawling in the opposite direction, what do you think we're looking at for? The fact that is this market going to revisit this level and then make a swing high, and that is clearly what it is. So in simple terms, we just sit down, watch out for certain scenarios like the trend line, certain scenarios like the Fibonacci, certain scenarios like the double top, double bottom, and use key precise candlestick confirmations to find these beautiful entries and then continuously make money in the market. So as simple as it may seem, it takes a lot of dedication and work to discipline yourself to follow this simple criteria in finding trade entry on the market and becoming a consistent trader. So I hope this video was very informative and you learned a whole lot, and it's kind of refined your mind to not really complicate your trading lessons or trading strategy or whatever system you have in place, right? So if you love this video, you know what to do. Smash that like button, share this video to your friends, and subscribe to the channel if you haven't done it already. Click in the link in the description to join the KOJOFOREX Telegram community, a very important, growing, fastest growing community in the sub region. Has 51,400 subscribers. And follow me on all social media, especially on Instagram at KOJOFOREX. I'm going to see you guys in the next video. Peace.